I don't even want to take my job.
Sorry that you're missing part of your parade preparations there. Us Chiefs fans really have very little sympathy for you. So anyway, welcome to the call this morning. Thanks to Mike. We're putting him through the ringer this morning. He's already been on one call with us, now on another call for the critical illness assurity training. Janet will not be on this call. She is on another call at the same time, so we're all pulling double duty here this morning. So with that, Mike, I think everyone knows you, so I'll give it back to you, and we'll follow your lead.
Okay, great. Appreciate it, everybody. Good morning or afternoon, depending on your location here in the U.S. We appreciate you making your time available. We do know that it is valuable, and we believe that the information that we're going to share with you today with regard to the Assurity critical illness opportunity, we know it'll be valuable for you and be helpful as we move through things. We're going to spend some time looking at kind of why, first of all, then we'll look at the product, what it does, what it's intended to do. And this is not intended to be a CI basics conversation. This is intended to be an Assurity conversation. And then we will talk about things that you can do to utilize this with your customer base, with folks that might not qualify for the traditional long-term care opportunity. So we'll get things rolling here. The carrier. It's actually a combination of carriers. Assurity Life, Financial Life, and Lincoln Direct are the primary folks. They all came together as a single operating unit back in '07. As you can see up here, they have a few bucks. They've been doing this for quite a while. And financial rating-wise, they are A+, or I'm sorry, A- with AM Best. Okay. So first question: why critical illness? Well, provides benefits, allows your clients to have the freedom to choose. I mean, you can see the slides. They get to choose the best hospitals and physicians, treatment access, do whatever it is that they need to do. The overarching idea with all of the CI conversations are this: things that were life insurance claims back in the 90s because of medical advances are now critical illness claims. But survivability comes with consequence, and most of the consequence is financial. It's the cost of an out-of-network doctor. It's the cost of medical tourism, because the best opportunity for your client to get a cure for the type of cancer they have might involve them going to Europe for a treatment that's not approved. Any number of other things. We don't know what the specifics are with regard to their situation and what their needs are, but we do know that the right critical illness policy might make $100,000 worth of solution available to them. And that's really what we're trying to do, work within the solutions framework to provide them what they need, and reduce their stress during recovery. So now, one of the things that really drives this is changes in the long-term care market. This is what the long-term care market looked like about 10 years ago. It looks like a nice big, just archiving the previous call, a nice big football field, lots of room to run around. Well, this is now what the long-term care marketplace looks like. We're basically playing over here in a corner of the end zone. So it's a significant change, all right? Underwriting and pricing changes have really driven this. Critical illness fits nicely into that spot. Critical illness, overall, it's the perfect complement and supplement to all of the things that you're already doing. We know from dozens of conversations that agents are always looking for leads. Well, all the clients that you already have on the books for whatever you have them on the books for, critical illness for them will fit into the gap created by the fact that survivability comes with consequences. Okay? Just to give you an idea where the CI market is going, we talked about this in San Diego. It's almost doubling every 2 years. In 2012, the total premium was about $230 million. Some quick math that would tell you that CI is probably going to be around $450 million in 2014. And we talked about this. If long-term care financial partners could generate 2% of that, that would be somewhere in the neighborhood of $9 million in critical illness premium. All right, and I don't know all the math involved with share grants and dividends and such, but I do know enough about math to know that would be a significant diversification and stabilization move for LTCFP. If every partner wrote one critical illness policy per month, based on average sales, you'd probably be looking at between $5 and $6 million of critical illness premium generated in 2014. That's a big number. So Assurity Balance, there's two parts to it. There's a simplified issue part, there's a full underwriting part. How it works in a nutshell, it pays a lump sum benefit upon diagnosis of a covered critical illness. Okay? It's not based on costs incurred, expenses, time lost, anything like that. You have a diagnosis, you get a benefit payment. That benefit payment goes directly to the insured without restrictions, and it pays in addition to other insurance, whether it be long-term care, whether it be health insurance, whatever it is, this money comes in on top of that. It's to let them deal with whatever they need to deal with. Give you a quick real-life story object lesson how this fits. We had a colleague of mine here in our office who from late 2011 to late 2013, while he was here, battled pancreatic cancer. He continues to battle, but he's taken a medical retirement. During that 2-year time frame, he was going to Seattle virtually every week. It's about a 300-mile round-trip commute to take part in an experimental treatment protocol at Virginia Mason, which is one of the world-class treatment centers. The health insurance that we have is really good. We're fortunate in that way. And that covered virtually all of what you would consider to be the primary expenses. What it didn't cover was time lost from work, gas, meals, all the things that come with making that trip over there every single week to undergo that experimental treatment protocol. Now, he was 58 years old when he was diagnosed. The truth is, whether he was 58 and using what we would categorize as conventional health care or 68 and using Medicare or a Medicare Advantage, that same gap exists. The typical cancer patient has about $1,200 a month in out-of-pocket expenses. Critical illness obviously can go a long way towards taking care of that, and that's the reason that we're spending so much time stressing it. It fits everywhere. So you can see the slides. This gives you a snapshot of where these two different things fit in, all right? The simplified issue product, obviously easier to do the underwriting, comes with there's some trade-offs both ways. Lower issue age, lower benefit amounts. However, key thing, the benefits don't reduce. It's common within the critical illness framework that at the age of 65, the benefits reduce, and you'll notice that over on the full underwriting side. Now, the full product has higher issue age, higher benefit amounts, but the benefits reduce by 50% after age 65. Now, the other trade-off here, it's guaranteed renewable for life. As long as your client pays the premium on a lower benefit pool, they're going to have it. The simplified product is guaranteed issue up until 75. So you have some trade-offs. Don't spend a lot of time memorizing this. We can make the PowerPoint available to you, and it's going to be a lot easier for you to learn this on a case-by-case basis as we go along. Okay? The max benefit amounts on simplified, it's $5,000 up to $50,000. On full, it's $50,000 up to $500,000. So now, what are the illnesses that are covered? And with Assurity, you basically have three categories. You have the cancer category, you have the heart, stroke, cardiovascular category, and you have what I call the other. Now, as is pretty common within the critical illness space, each of the first two have some relatively basic recoverable conditions that pay limited benefits. Cancer in situ, what they call non-invasive cancer, that pays 25% once per lifetime of the max benefit. Okay, the same thing with bypass surgery or angioplasty, and again, that's because these are recoverable, and the carrier made a decision that it didn't want to bleed all the benefits on something where the client really truly doesn't need them. It's much more likely if they had an extensive battle with an invasive type of cancer that they would need that higher level of benefit. But as you can see, heart attack, transplant, aortic surgery, or valve replacement, stroke, all those things are 100%. And down below, all the things that are in the Category 3, advanced Alzheimer's, etc., you can read them all. I'm not a big reader when it comes to that sort of thing. Those all pay at 100%. So this product does present the opportunity for your client to claim as many as 3 times across these multiple groups. Okay? And again, there isn't an elimination period or a waiting period other than the standard 30 days at the inception of the contract. After that 30-day period of time, when you have the clinical diagnosis of a particular condition, cancer involves pathology. Once you have that, then your clients are going to receive a benefit payment. So now, the simplified platform, really pretty similar, to be honest with you. There's just a smaller number of other category conditions. Okay, you've got your cancer, you've got your heart, stroke, cardiovascular, and you've got your other. Same basic idea on the restricted coverages, non-invasive cancer, the cancer in situ is at 25%, bypass surgery is 25%, and angioplasty 10%. And again, once per lifetime in each of those situations. Down below, a smaller number of things, but you do have the advanced Alzheimer's coverage that is relatively new to the critical illness framework, and it is one that has really begun to catch people's attention for obvious reasons. Return of premium on death. Okay, it's built in. It's available on both the simplified and fully underwritten plan. And you can see the basic information here. Okay, there's a note, a caveat on the simplified plans. 100% of the premiums paid minus benefits are returned when the policy terminates. So they have a walkaway, and this is built in. Okay. If they terminate before 75 for whatever reason, a percentage of those benefits are paid. And again, don't worry about furiously scribbling notes here. We'll make slides of this presentation. This is not intended as a consumer presentation. We will make that available. This is a training for you. We will make the PDF slides available for you to review, and you will have the ability to go back and look at the archived presentation as well. Optional riders available. We're not going to spend much time talking about those. You have a ROP regardless. You've got disability waiver premium, accidental death, spousal benefit. I wouldn't recommend that because it's essentially the same thing. It's far better off to get them their own policy. The one you might want to spend some time with is the children's rider. If you have questions on that, we can cover those offline. I don't anticipate a ton of traffic because most of the folks we deal with, their kids are grown up and are out of the house. So we're going to take some time here and talk about underwriting. All right. We've got to look here at the 2 primary pages involved with the underwriting process. I know some of you were probably on the underwriting checkoff tool call that we had earlier this morning. So you've got that available for you as well. Pretty simple and straightforward as far as this information here. The key one that you really want to be familiar with is right here. If your client had a heart attack or a stroke previously, has cardiovascular issues, the likelihood is they're probably not going to get the coverage because they don't want, for obvious reasons, they don't want to buy a claim. The same type of thing with regard to cancer. Okay, and we're going to want to look at it on a case-by-case basis. They do have a family history question down here, number 5, that you'll deal with. And it's based on age. The heart disease issue is prior to age 65. Colorectal cancer or Alzheimer's or dementia up to 75, and then any other type of cancer up to 55 as well. And again, we can get a particular situation in front of an underwriter with Assurity and have them take a look, give you a ruling on, based on the basic specifics, if you will. Okay. Kind of the nuts and bolts of Simplified again. Issue ages are 18 to 59. The benefit amounts are $5,000 up to $50,000. Pre-screening checklist is pretty basic and straightforward, as you just saw. Phone interview, they reserve the right to do that, and I'll explain why in a second. They do have a height-weight chart. They utilize MIB, and that really ties back to the phone interview. They use MIB, they use a pharmacy check. Now, if something doesn't jibe between what they have on the application And what you've got with the MIB and the pharmacy check, they may just pick up the phone and call your client, so prepare them for that. And what they're trying to do is just verify information. These are not built to get really heavily into the APS and such. They reserve the right to do that, but they would just as soon not, because it really slows the process down, as you know, from long-term care. I see we got a question, so I'm going to grab a quick look here. Are those knockout questions in section 2? Yes, they are. Okay. Anyway, so as I said, they do the pharmacy check in the MIB. If there's questions there, if things don't jive with what's on the application, then they're going to do a phone interview, and they reserve the right to do an APS if necessary, but they would just as soon not do that if at all possible. What do we got here? Okay, you're welcome, Steve. Thanks. Okay, going to keep on moving. There we go, full underwriting. Okay, a little bit different on the issue ages. This is 18 to 64 rather than 18 to 59. As I said at the beginning, a higher benefit amount. You go up to $500,000. Got the pre-screening checklist, and you all have access to that tool now. Phone interview is required, as is a paramed, and some very specific instructions with regard to blood profile and such. Each application has this information, as does the agent guide, and I would highly encourage you to get the agent guide if you're in a state where you're going to traffic with Assurity on a regular basis. They may want to do an electrocardiogram based on the age or the amount of coverage. If you're going to get into the higher amounts, above 250, you can be sure that they're going to fully underwrite this with all the resources they have available. Cognitive screen. Jerry, no, there is not a cognitive screen. What's the target age group for this product? Let's talk about that here in a second, Roger, okay? Anyway, there are income guidelines as well. They're not going to take somebody and cut them a check for $500,000 unless it makes sense within some income parameters that they have. And again, that information is included in the agent guide, and the full application has a little bit more in-depth family health history. Okay, so I'm going to take a second now and talk about what the question that Roger had, which is how do you go about having this conversation with people? And I'm just going to spend a second on this because it's really basic CI, and we will have a module for that down the road. It's a real easy question to start with, folks. You just explain to them. As things have evolved in the health market, Affordable Care Act, et cetera, the universe has changed significantly. Not only have improvements in medical technology made a big difference, but the reality is we are paying more health insurance premium for less health insurance coverage. And you want to have that conversation with your clients, and you want to lead into it with a little explanation, and then you ask them a very simple forward question. Who do you know? Now think about this. You don't have to all raise your hands because we're all sitting by ourselves. Who do you know who has had to deal with cancer, heart attack, stroke, Alzheimer's, any of those items that we talked about previously? Okay, the big four, cancer, stroke, heart attack, Alzheimer's, they're responsible for 70% of the long-term care claims. Okay, so significant numbers. And when you ask people, they are going to know somebody. They are going to have, in all likelihood, had a personal experience with that situation. Once you start that conversation, ask them what happened, you know, how it all played out, get them talking, let them do the talking at that point, and then there's a real easy close. Would some extra cash have helped those folks out? And I don't know any situation ever, I've been doing insurance for a long time, I don't know of any situation where the answer to that last question is no. And again, we'll spend some time down the road, we'll make available the basics of CI question available, or basics of CI module available here, but it is a fairly simple conversation to have. The nice part is this is the perfect complement and supplement to all of the things that you have been doing. If you wrote a long-term care policy on a couple in 2006 and they're in their mid-60s now, they've got a huge exposure, even if they're on a no-deductible Medicare Advantage plan, because they've got all these other things that health insurance doesn't cover. Critical illness can take care of that. Okay, so I know that leads are always a hot button topic with agents. all the folks that are in your existing client base, if you want to call it that, they're all long-term, or they are all CI leads, excuse me. They are all critical illness leads. They're all worthy of having that conversation. And they will appreciate the fact that you're going to circle back and help them out. Now, going back to our opening premise, who do you know? I talked about this in San Diego, just myself. Lost a brother-in-law in 2008 to a brain tumor. Another brother-in-law currently battling pancreatic cancer. My mother-in-law had a lobe of her lung removed. They found a speck about the size of a pencil lead in there, and they took that lobe out, and that really was a cancer in situ situation for her. I tell my wife kind of jokingly that I think their house is built on top of a uranium mine, which is a little bit sad, but it just goes to show you that when you really stop and think about it, it's all around you. And what makes it being there all around you is because it's survivable. People are living for the most part and are able to survive it and talk about it, but they do have to deal with the consequences. All right, so that wraps up that piece. I'm going to take this last typed-in question, and then we'll open up the phone banks because operators are standing by. The next step, to give us a call here at AIM, and I know that you saw the early version of what Janet and Tracy have prepared, which is the chart. If you use the mutual product for long-term care as the guide in terms of who to contact, then you can always call us here. It'll tell you who really has the expertise. If you're looking at information for Tennessee, truth be told, Golden Care is going to know more about the specifics in that state than we will, but we will help you regardless. So let's take a look here. What do we got here? Target age group, I would say, is anybody over the age of 45. Okay, we talked about that. Cognitive screen, no. Lori had a question about why I said people have about a $1,200 a month out-of-pocket expense if they have cancer. That's the statistic that we have in terms of out-of-pocket expense for that. In terms of people who can't get long-term care, depending on the specifics of the situation, these are a good possibility. Okay, the critical illness product from GTL, which we're not going to talk about other than for 10 seconds here, really will probably work better for that than any other. And in terms of what states is this available, you've got that new matrix that Janet and Tracy that we provided that includes state availability for you. And yes, we have a consumer presentation. We will have it and have it available for you next week. So now that said, we are going to go here and we're going to unmute folks. Now, please be kind. If you have background noise or a cell phone or anything like that, please single mute yourself with a *6 so that we can keep the call fair to everybody. If you have not keyed in that 2-digit audio PIN code, we will not be able to include you in the Q&A portion of the product. I'm working my way through getting everybody unmuted right now, as you can see. So we're going to go ahead and take questions. Fire away.
Mike, this is Joan Sosserman in Colorado Springs. And
hi, Joan.
Hi. I noticed on one chart it said advanced Alzheimer's. So
right.
Does that mean that it will exclude other than that type of Alzheimer's?
Well, remember, Alzheimer's is like a boulder rolling down the hill. It doesn't back up, okay. And what they're doing with Alzheimer's is they're making sure that the benefit is available when they really, truly need it, because it reaches a point, and there's a very specific definition about what that is in the policy, okay. And all the carriers that have Alzheimer's coverage have some version of that, and it's primarily designed just to make sure, again, that the benefit is there when the clients really need it. And they also are going to have definitions of all these other kinds of things, okay. Remember, this is an insurance contract. I think it's really easy to focus on what it's not, but the simple truth is you want to focus on what it is, okay, the value of what it is. So, all right, so let's, we got everybody unmuted here. Let's take more questions. Got another one typed in here. Yes, okay. Kim notes here that on the earlier call I recommended that if GTL, the Guarantee Trust Life product called Critical Care, if it is available for you, I recommend that you go with that. All right. If it's not available, we'll do the best that we can to help you. I do know that Guarantee Trust is working hard to try to get approval in a number of the, I think there's 13 states that they are not in right now. We just found out yesterday, I think, that Iowa and North Dakota are at the dance now, so that brings the number up to, I believe, 37 or 38. They're working hard to try to get approval in the other states where they aren't set up right now. Florida is in limbo for at least a couple years. There's a regulatory dispute there. New York, as I mentioned on the previous call, it's not going to happen in New York because of the domicile rule. The only available product in New York is Mutual of Omaha. We will have a specific product training call for Mutual a little farther down the road. So a little bit of an aside there, but I want to circle back and take any more questions that we might have. Somebody's got a phone ringing there in the background. If you know who you are and you hear it ringing, if you could hit *6 so we're not listening, there we go. Thank you very much. Okay. Other questions here?
I know about Colorado. I think you've filed already.
The GTL product's available in Colorado.
I know, but what about the Assurity?
They're working on that. GTL's a better opportunity. Trust me.
Yes.
Go with GTL.
Mike?
Yes.
Dana.
Hi, Dana.
Hi. Love these New York questions, right?
Yeah.
The Mutual of Omaha, when it is available in New York, will this be a critical care product?
Yes, it is available now in New York. We do have training coming up on it here within the next few weeks on a kind of a predetermined schedule. But if you've got New York specific questions, feel free to give me a call.
I will.
We'll go on we'll go on the take a look at the individual situation that you have.
Thanks,
okay?
Mike.
You bet. You bet. Thanks, Dana. All right. Any other questions out there this morning?
Hey, Mike. It's Jonathan here in Georgia. So,
Jonathan, how are you?
I'm doing good. The Assurity is the one I'm going to be focusing on learning about because it's the only one I got here. So,
yes.
Something I wanted to clarify in terms of looking at this for the future when I'm getting this for younger applicants towards the bottom end of that spectrum. I'm assuming that there's no level of growth at all, and does that mean there's no sort of buy-up or no sort of purchase option in the future? They actually have to pick the lump sum at application, and that's the lump sum that they've got?
Yes, that's correct. You get what you get. There is no inflation on any of these CI products, okay? I guess you could see that as kind of a what it isn't, but one of the what it is advantages, you don't see rate increases on critical illness on in-force business because they know how to price for these conditions, and they don't have to worry about somebody buying the policy and keeping it till they're 117 and letting it grow and grow and grow through the roof. And as we all know, that's killing the long-term care marketplace right now. So short answer to the question, your client has what they have when they buy. Sounds like somebody's making a cup of tea in the background. Any other questions? Tracy, you're the training guru out here. You have any questions on things that you're hearing from folks?
No, the New York thing is what comes up most often. I mean,
sure.
You know, and you've already addressed that. And I'm the training diva.
Sorry.
Kidding. No, actually, no. Everyone's pretty good about stepping forward and asking the questions. And aside from that pesky New York, I think we've gotten it all covered.
Okay. There are a couple of other peskies that I don't really have. In fact, the news isn't even as good as it is in New York. Connecticut and Massachusetts, for reasons that I don't fully comprehend, are essentially the dead zone when it comes to critical illness. I know that Steve Foss and Larry Golphin weep when the subject even comes up. We just don't have anything to offer there, and it isn't just within our product group. We looked across the spectrum and couldn't find anything that was approved there. So I'd love to be able to help you out, but it is the reality. So I know everybody has things they need to do moving forward, so I want to move this along. Any other questions, anything we can do to help folks? And again, our phone number is right here. If you're on the Golden Care side and you're looking for product expertise in Kentucky, you can call them at 800-842-7799. Most of their crew is out of the office today, but they will be back on Monday. Again, 800-842-7799. So we got a typed-in question here. Oh yeah, I know Dennis is heading down to Texas to talk to some folks. As far as successful worksite cases, yes, we have had a small number of successful worksite cases, but this does not come with discounting. It's not built to fit within the proverbial group framework. If you're working with a small company, you can get some list billing and things like that accomplished that make it fit there, but it's not a direct smooth thing, but it will work. And the biggest thing is just asking, because it's a benefit that employers can make available for very, very reasonable premiums that will help folks out, and it doesn't require quite the level of belief and commitment that long-term care seems to require. So I appreciate that question. Anybody looking for other information, product materials, etc., you can always email me, Mike.Anderson, A-N-D-E-R-S-O-N. Most of you have this, but just in case, Mike.Anderson at whyaim, WHYAIM.com. And again, as was advertised on the earlier call today in the 11 o'clock hour Eastern Time, we have the availability and underwriting matrix that I think it's posted on the website now. Is it not, Tracy?
Not quite.
Not quite. Okay. Well, it will be soon. It is available. The ladies can get it to you. I think that's a very handy electronic tool. You're going to want to have it around because it's going to help you boil things down very, very quickly. So let's make one more pass for questions. Otherwise, we'll respect everybody's time and close things up for the day. Okay. Well, we got one more keyed in. Hold on for a second here. Yeah, George makes the point. Simplified Issue is available with or without a group. Okay. Tracy, thank you very much for the opportunity to get together with folks. I know we're on the schedule again in 2 weeks on the 14th.
Yep.
Same bat time, same bat channel. We'll have some other additional good stuff for you. I'll let you go ahead and take it here to close things out.
All right, so that wraps it up, everyone. If you have any questions, of course, you can contact me, and I can get to Mike, or you can contact him directly, however you want to handle it. I will get those things posted to the website here shortly, if not today, Monday at the latest. So with that, have a great day and a wonderful weekend, and we'll see you all on the phone jams tomorrow.
All right. Thanks, everybody.